Brooke, we love our superlatives here at Bloomberg News, but the biggest tech deal so far is between two companies that aren't exactly household names. Why is that?
It is, and it's interesting because the semiconductor industry is really primed for consolidation. Things aren't growing as fast as they were, but they need a lot of money to fund these new plants and fund these new chip designs. And so people are really turning to acquisitions as a way to grow and to keep the expansion going.
They're turning to acquisitions, Tom, but what we've heard from the tech world so far has been spin-offs and splits. That's been the trend for eBay, for HP, right, for Symantec, for Yahoo. Why is that more attractive than an outright acquisition?
Right. Well, for many of these industries, what they've gotten really, really big, they've diversified, and they've really become subject to activist pressure. Activists have gotten in there. They've said, look, we can get more value from our shares if you break off this part of the business, if you sell this part of the business, if you give us ownership of this particular division. So that's kind of what's happening with some areas of technology. But as Brooke was pointing out, in the semiconductor space, these companies really have to get together to survive. Chips are expensive. Chips ain't cheap, as my colleague Ian King likes to put it. Also remember that the customer base is shifting. Samsung and Apple, two of your really biggest customers, those two companies are favoring their own chips.
And these are international deals, too. This is not just deals within the United States. How does the stronger dollar of late play into all of this, Brooke?
I mean, it's been playing into all M&A. It gives, companies a lot more firepower to go after these deals that, like you said, investors really like and that they need to boost their growth and to put their cash to work.
Is this a done deal, this Broadcom Avago, or could there be a bidding war that results?
People are kind of divided on that. There's some thought that, this could be a really great target for someone like an Intel or a Qualcomm. But then on the other hand, Avago seems like it's got a great deal lined up here. The price is not crazy, but it is full, and so it will be, a challenge to try to top that.
Tom, you cover the tech industry at large. We're talking about semiconductor companies here, so hardware companies. There's also been talk of Salesforce in the software world. There's not as much activity in social media, is there?
Yeah, that's been it's newer. Your growth is still a lot higher there. You don't have the same kinds of pressure. Having said that, there's a big question mark over what happens with Twitter. Twitter is continually in the chatter about will it be bought, what companies could take out Twitter. Google is one that certainly comes to mind. Those two companies certainly are mum on the word. We don't know of anything in the works. But you've got to really ask the question about management at Twitter. One of their biggest shareholders, one of their biggest cheerleaders, Chris Sacca, has said he's going to start to become more critical. So we might see a new wave of agitation, a new kind of activism from an actual owner of a relatively new company.
What is the level of anticipation, Brooke, for more supersized tech deals from investors and also from the companies themselves?
I think people are thinking we're going to see more of these because it's not just the semiconductor industry. It's all tech companies that are, in more legacy businesses that just aren't growing the way that they are. And you don't know how long these low interest rates are going to stay around. So if you're thinking about a big deal, now's really the time to do it.
It's all about buying growth because appeasing shareholders with dividends and buybacks is no longer working the way it was.
It's not doing it anymore.
All right.